Hey everyone, today we're going to talk about indicators. It's the second part of the technical analysis I wanted to show you. And basically we're going to overview the most interesting and popular indicators that are there. And I will explain to you why do we have it, why it was created, and what it actually shows. Another part is that I will try to show you how you can use it in the application, and how you can create your own signal which will notify you based on the conditions you prefer and you believe makes the most sense. The most important part, what indicators are doing, is that they are trying to sense the momentum. So when do you need to buy or when do you need to sell? So if you ask your grandmother, for example, by looking at this chart or whatever kind of any asset, she will tell you that you have to buy it when it's low and then you have to sell it when it's high, right? So, and where is the momentum? So it's clear that if you're looking on the past, then the most interesting point to buy is here. So you open the position over here, and then the most interesting point to sell is actually over here, right? Nothing special, but you can't guess it. So of course you have levels for that, as you remember. For those who haven't seen it, I really encourage you to see it. It would really make a lot of logic for you. Here it should be green. So here it's a buy, and here it should be a sell. We're talking about perfect world, but our world is not perfect. These indicators were created 20, 30, or whatever kind of many years ago. So in reality, they are still working, but you cannot rely on them 100%. I will really maybe repeat it many times because this is not the exact science. And what is also important is that those three indicators are usually part of the bundled indicator analysis. So if somebody is trying to sense the momentum and do all this kind of stuff, then they usually use one of those or all of those indicators. In the principle, these indicators, all of them, are playing a role of something like this Gauss over here, right? So it has a perfect momentum in this point to buy and perfect momentum to sell. However, that's how you need to understand it, right? So it's like a pendulum swing. So in one end, it actually goes on the left, and then it's a momentum to buy, and on the other side, it's actually a momentum to sell. But the thing is that with pendulum, it actually repeats, the perfect pendulum just repeats the same swing, while here, based on the fundamentals, those swings can be very, very delayed. At the same time, they might have the amplitude, which is very, very different from what it was in the past. And usually when you have volatility like we have right now on the market, these indicators, you have to be very careful with those because they really jump left and right. Okay, here is how it looks like. So let's start maybe with the Bollinger over here. So Bollinger is basically a blue line that you see here. So in the middle you have a price candles. So it's actually a daily chart of the company car. In a principle, price is going, as I said, the pendulum, right? It goes all the way like this. So it tries to go left, right, left, up, down, up, down, up, down. And then at some point, if it goes extremely up, then it actually creates this amplitude over here. And then this amplitude, according to the Bollinger, has to be compensated. Now let's have a look at RSI 14. That's a most standard parameter, even though sometimes people are using 2, just to highlight the momentum. What it does, in fact, it's like a scale from 0 to 100. And in average, the range where this parameter is, where this indicator is moving, is either between 30 and 70. Let's put it here, between 30 and 70. This would be, let's say, the standard settings. If you want to be even more protective, then you can actually add it up to 80 or 20. So that's basically should be like this, right? And the principle is it actually repeats the spikes and shows you if this asset is either oversold or overbought. So in this, for example, momentum, you can see that it's heavy oversold. And in this momentum, heavy overbought. So the moment it goes beyond the range, it's screaming that you have to buy it or sell it. In the principle, you have a zero line over here and two moving average lines, the fast one and a slow one, so 12 and 26 that you see over here. And then basically you see it actually crosses many times, many times. And the perfect momentum is in fact somewhere in the middle. So when you have a change of the pattern, usually it overlaps with the maximum spread between those two moving averages. Also, it shows you the divergence. So over here, for instance, you see it's going up, those two moving averages. And if you go from here to here, it also shows you the growth momentum. So it shows you that the trend is actually a correct one. There should not be a reversal, a heavy reversal right now. Each of those parameters are basically independent one, should be independent one, and each of those has its own probability like I showed in the previous one, right? So you see right now this Gauss on each one. So in practice, when you basically have an example of, let's say, buying opportunity over here, buying opportunity over here, and buying opportunity at the same time with 3 or 25 other indicators, then it actually gives you a perfect momentum to buy from the indication point of view, let's say this way, right? I will show you an example right now with RSI in details. So exactly the same graph. Over here, you see the RSI signal. So depending on where RSI is, it actually gives you either a buy or sell opportunity. Now let's review how the signal works for RSI, right? It's just the isolated RSI, it's not a bundled or something like that. It's just an individual one. How it looks like. So you see this momentum over here that it's a growing sell signal. We see that right now it's actually in a middle position over here, the actual signal, and that's basically a zero. Why? Because it doesn't really, it's not very clear if it's going to be going down or up, but then in a practice, the parameter started to go up. So the signal started to go up and it reached this kind of 70, 80 range. And the moment it breaks the range, it basically gives you a 100% sell signal from RSI point of view. So if we look on the chart, it actually shows you the perfect momentum, right? Right now you actually see that there is no level because this level was actually formed by this candle. So at this point, actually, even in time, it's already a dangerous situation. It's all-time high. It's already a very high indicator. And so normally you should actually even sell at this point from the RSI point of view, even though it's not yet 100. So another opportunity for buy is actually laying over here. It's completely the opposite one. So you see that from this mountain, it started to go down, 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 just like a pendulum, right? So the pendulum went dramatically up, and then it started to go the same way down because the energy is pushing it down. And then it starts to break 30 and going up even to 20. So if you take the minimum points of RSI, you see the same way the buying opportunity is growing. So in a maximum momentum of RSI, which is 100, you see it catches the perfect momentum for the buy opportunity if you see it right now, right? So coming back to our Gauss that I mentioned, you see the principle right now, right? So the break-even point is in the middle, and then the moment it's going down, it's a buy signal. The moment it's going up, it's a sell signal. And in Upstocky, basically, this logic is embedded immediately, right? So you see it proportionally that it's trying to catch depending on the momentum, right? So you don't have to think what is good and what is bad. It will basically tell you that. Now, how to find those three parameters? You can see there are even more. So first of all, it's part of the technical analysis. You go to the indicators, which is over here. You see it by the icon. And to add that on your chart, you have basically to click on this one, and on that one. And here, actually RSI 2, if you really want to do that. And here are the standard parameters. However, what is also interesting, first thing beginners are trying to do, they try to play with the standard parameters. They try to do, I don't know, Bollinger 25, RSI 12 or whatever kind of things. That the way I use that, it's just the standard parameters. I don't really want to play. Why? Because then you're actually pre-coding the situation that you expect, and you can make it very aggressive, or on the other side you can do it very conservative, and then this situation will never ever happen. You can actually see that in not immediately, not in all cases, these parameters are working, and right now it's a good example. So let's have a look at this one. So let's say here is a Bollinger, right? And with Bollinger, you see that at this point in time, the Bollinger was saying 100% sell, right? But we see that the price actually went also up more than 25%. So you have to take that into account. So you can't rely on the indicators 100%. It just have to be one of the parameters that you're taking into account when you're buying, when you're taking a decision either to buy or to sell. There has to be a reason why you do that, right? And for me, the perfect situation is when you bundle different aspects together. So, for example, you're bundling indicators with levels. Now, for the blended signal, you see right now settings over here. And here are the basic parameters that are taken into account. So let me know if you think that there should be some other indicators taking into account your experience, and we'll have a look on that, and potentially it could be a future improvement. However, let's have a look at the situation right now. So you see right now RSI 14, 2, MACD, Bollinger Bands, and levels as part of the blended signal, and each of those have 100, 100, 100, 100. What it means? It means that in the overall signal, the weight is 20%, 20%, 20%, 20%, 20%. For example, if you would actually decrease, for instance, to 50, then you're shrinking that to 10%, and then you give 22.5, and so on and so on to everything else. So like that, you can play with the power logic that makes sense. I know that some people are having really strange ways of how they bundle that, but whatever you will select here will basically reflect into the total signal. The moment you try to buy or you sell, you basically want to make sure that your odds are very well analyzed, that odds are on your side, which means that first of all, you have to start with the companies you personally understand and you believe that there is a future. I would not say that the more parameters you will take into account, the better, but you have to stick to the logic that you personally believe makes sense, right? So if you believe that levels are a very important one, so for me it's one of the very, very primary and important elements, and for instance, you believe that indicators, some of those or all of them are making perfect sense, you have to find the perfect spots. So like that, you're decreasing your risk and you're improving your probability of success drastically.